Hey, what's up, though? This is on Sunday, November 25th, 2018. Just looking back at the charts from Friday. I didn't trade on Friday. Just wanted to look at them and kind of, I'm not sure what even happened on Friday. I started the charts out at about 6:30 in the morning from Friday, and just going to kind of click through it and see if we get anything. I went ahead and marked up what I saw so far. Marked up this high at 38. Marked up this kind of pop up here at 04. And then marked a pop up here since it got back to the moving average at 47. Those are kind of the 3 points that I potentially would be looking at. I didn't mark this one or this one because I figure if I get to this one, I would probably end up using this one anyway. So this one here would be 29, so about 10 cents in between these. So this would actually be a really good range here if we go ahead and mark this one up too. So you almost want to do like a look here to see which of these levels maybe get used when the time comes. But these would be the ones that we'd look at. So I'm marking them red because they're overhead, making them resistance. I'm marking this one yellow so I don't get confused. I wouldn't use 29. Well, potentially you could use 29, but I'm just marking it yellow because they're so close. So taking crosshairs off and just using the right arrow just to kind of see what we get and simulate an actual trading day, then kind of go through psychology here. I'm not sure what happens. So, all right, so that's the first low we could put in. So I'm just Control C, Control V, and then since it's a low, it becomes green. I can get it to snap. Usually they snap to like the very bottom of the candle. I'll make lime green for support, and we'll keep poking through here. So we can now start trying to count. Actually, let's just see what happens. We want it to make a move away from the moving average to start our counts. So you would maybe start counting here if it continues to move lower. Okay, so some may call this a 1 and then a 2, or I mean a 1 because it pulled back here. We'll see what happens around this 63 area. I probably would not have counted my 1 yet. This is a little more conservative. So there's your close below at 62. Zoom in here. So we also have a stochastics below 10. I think I changed this to 10. So stochastics below 10, which is actually below 5. So potentially pretty aggressive. You could take the next candle as your entry. Let's say you did, and we'll just play it out here. So if I got in at, say, 62, my stop goes down at 52. I'll just hold my cursor there, and our target becomes 62, 72, 78. So 72 plus 5, 50, 78 would be our target. We would be looking for 72 to take all the risk out of the trade. Oh, it actually did work. So 72. So our stop would be back at our entry at 62. And we'll see if we get 78. So there you go. You get your 15. So I hope that makes sense. I wouldn't have probably taken it. I mean, potentially could have, but so somebody might have counted this as a 1. So if we do a text here, we might count this as a 1. And then we would validate the 2 going below the moving average, right? Or not moving average, below the pivot point where we're looking to enter. So it fit our checklist. If I want to go back and look at our checklist here. So prior swing, 1 and 2 try, double top, double bottom, close above or below. So we closed below right here, this candle that I'm on. We closed a tick below the 63, and then stochastics below 10, which was the case. If I go back a couple candles. So that's the signal candle. Below the 63, stochastics below 10. Enter on the next candle, stop goes minus 10, and it pops up. As soon as it goes plus 10, we move our stop to entry, so there's no more risk, and then we're hunting for that 15. Make sure we didn't get stopped out. And we wouldn't have got stopped out there if we got in at 62. It only came down to 65. So there you go. 78 becomes your 15 target. That was a pretty good one. I'll mark it up. Mark that up as your entry candle. Just keep an eye on it. Okay. So what we have now, just to kind of reset everything, I'll make this white. So that means it's been used and we don't use it again. We take it away. And let's see what we got here. There's a double top. This could be seen like a double top. It's not exactly a double top. Actually, you could use this candle, and all these candles are double tops, or multiple points on that. So what I do, I'm just trying to act like I would, during actual trading. You'd mark this up as a range, which invalidates using this level as a red. So I wouldn't put a red line here to try to get the 1 to 2 above it. I just wouldn't use it anymore. And the thought now is that if it goes lower, we want it to come back into the range, and if it goes higher, we want it to come back into the range. That's kind of an advanced, an advanced course that I took at one point, kind of talking about ranges and how it almost turns into a magnet. So if it goes lower, it's going to go back into the range and higher. So we'll see if that makes sense. Again, I haven't really watched the day. Oh, and then we're also going to measure our second and third target. So first target's always 15, which we hit. Second target would be 20, so 62 to 82. That would be your second target would be reached. And then your stop goes back, stays here at 62, and then your next would be discretionary. So I'd say your discretionary is probably up here at 98. So you would have got the third target. So that would have been a actually good set. All right, so we know our points. Okay, now even if you were using this, which I don't recommend using this as a horizontal line, like putting a horizontal line here, I don't recommend because it's double top. I meant to copy that, sorry. So we'll put our red line back here. So I wouldn't recommend using it, but say it wasn't a double top, you don't have a 2 try here. So you have one kind of move away and you never got a pullback. So you wouldn't sell this here. Some people tried to and they immediately got stopped out. So keep that in mind. All right, so we're not using that, so we'll take it away. So a really strong move higher. We would be able to put a 1 up here if we got a pullback to the moving average, which we never did. So again, I can't use the 47 yet because I can't put a 1 in. So there's a moving average pullback, so that actually becomes an official 1. Okay, that's a really strong candle. So what I would say is we would give it up to 4 maybe candles, additional candles below, which then starts to count over. Let's see what it does. Then we can kind of talk about it. So that's 4 candles that invalidates this candle. So it makes that entire move down, it makes it all back up. So I'm inclined to say that this is still in the 1 to 2 cycle, and a 2 would be officially above the 1. Put my cursor here. So above 40, we can put in a 2 if it goes strong enough. So now we're looking for a close above 47. Okay, so there's a close above 47. So this is kind of tricky. I don't know what happens here, but let's assume that this is our 1, and then this is going to be our 2, since we put in a higher than a 1, and we pull back to the moving average, so we'll mark it up. I'm inclined to take shots because the more shots we take, I think the numbers will work out a little better. But let's just pretend we're going to trade this. So let's look at our checklist. So we've identified the 47. We have a 1 and a 2. It's a little bit longer 1 and 2 than we're used to seeing, but it's still a 1 and 2 nonetheless. We have stochastics above 90, almost to 95, so that's a good sign. And we have a close above that prior swing. Make sure I'm not missing anything. Prior swing, 1 to 2, double top, nope, close above, and then stochastics. And so all it is now is acting. So the action of acting on the setup. So the next candle will be your entry candle. So let's say you get filled here at 47, right at the line. 47 means our stop is going to be up here at 57. So I'll just do my cursor at 57. And our target's going to be, our first target is going to be plus 10, so 37. So it went against us for a couple ticks, but it didn't hit our stop, so we got to be really strict on that. We're looking for another 5 cents. Okay, so now since we hit 37, which is right here by 1 tick, we move our stop down to 47, and then we're looking for another 5 cents, so we're looking for 32 in this case. Okay, so 32 becomes our plus 15. If it pops back up to 47, we're then stopped out of the trade. So let's see. So we moved our stop down and we're looking for, we got in at 47.37. We're looking for 32. So this one's questionable. 32 is right here at the bottom of this candle right here. So 32 was right there. It was the final tick of that candle. So you may or may not have gotten filled. The hope is that you did get filled because immediately it popped back up and hit 47. So you would have, the way it works, the markets are sick, right? And so you would have not gotten filled here on this tick, and you would have gotten filled on your stop on this tick. And that's just kind of the way it goes. There's nothing really that you can do about it. But, you know, is what it is, right? Oftentimes we just see it truck the other way. The good news that is, if you did get ticked out at 47 and because you didn't get filled here at 32, the good news is it's break even. There's no harm, no foul. You got in case it continues to shoot up, so it's all good. I'm not sure if this would have worked out, but you know, we're in the right spots, and then it ends up flushing out. So that's what's really, from a psychological standpoint. All right, I've tracked my 1, I tracked my 2, I followed my checklist, I got in right when it closed above the candle, I got in on the next candle, it went my way, it went to the tick of my target, but it didn't fill me, and it popped back up and got me out at 47, and then it continued to go plus 15, plus 20, 47, we'd be looking for 27, right? So that's actually target 2, 27. So it ends up doing exactly what you wanted to do, but you get ticked out and you make no money. And then the thought is, well, I'll just sell it down here. So the people that sell it down here is like, oh shoot, I got ticked out. I'll just sell it here. Then you sell it out and you get plus 5, and then you get minus 10 right away. And you never get so what you ended up doing is you ended up turning what should have been at least break even, because you got your 10 and you move your stop down. You end up turning up break even into minus 200 because you revenge traded it and you got caught up in the moment and you got taken out. So anyway, that was a successful, I mean break even or potentially made some money. Either way, we're taking the shots, we're seeing the patterns, which is the most important thing, rather than the money itself. Focus on the process, not the profits. The profits will come. Okay, so now I'm marking up my new level at 53. We're making this one white because it's been used, and now we're looking at the opposite side. So this could potentially be used. Let's see what happens. I love this strategy because it's both sides. As the market ebbs and flows, we look for opportunities on both sides of the fence. Make this, since it's under the market, it becomes support. We'll just do that, get to the bottom of this tick here. There we go. So I'm putting the line right here at 05 because that candle got down to 05, so that becomes that point there. All right, so let's see where we're at. So we got a 1 and a 2. I'm trying to think of how I would think of this. I don't know if I think of this as a 1 here, since it pulled back to the moving average. Let's imagine that as a 1, and then this would be a close below here would be a 2. So you never got the close. That closed at 05, and you wouldn't have taken it because it needs to close below 05. So because of that green candle, I would consider us too late, or actually, we didn't get what we needed, and so we wouldn't have got into this trade. So if it goes down now below 05, it's not a buying opportunity. Yeah, I wouldn't buy that, even though it worked there. That's why hindsight trading is pretty dangerous. So technically speaking, this is a close, so you would end up buying this candle here at, say, 90. Say you got it at 51, so this becomes your stop, and all you're looking is for 51.20, which you actually do get pretty handily. I guess, eating my words a little bit, it may be worth a shot as we continue to take more shots and make sure the numbers line out. It could have been a shot, and so if you're thinking, I don't know if I would have taken it. It would have been maybe different in the actual trading live. Who knows? But the way I'm looking at it is that this becomes a 1 since we have a push below the moving average and a push back up. Now I can write the 1 in, and now we're just looking for a 2 to close below that level. It actually didn't close until this candle here, so you could potentially buy this candle, say 651 or 99, and then you're looking for your targets above, and your stop is down here at 90, which it never even gets close to. So a potential another opportunity there. It's like there's more opportunity, there's a lot of opportunity, put it that way. All right, so we can't mark up this point here. It's just too soon. I wouldn't use that as a swing level, and you would have got stopped out if you tried to take it. Even if you used it as a swing level, you didn't get a 2-try into it, so it really didn't matter. Okay, so going back in something I said earlier, remember that range? Back into the range. So that's always, I actually really enjoy ranges because, look. Oops, I don't know what's going on with my machine. You see how it got back into the range? I said it was going to get back into the range. When you see those double tops and double bottoms, you're going back into the range whenever you get a chance. Sometimes, not all the time, but it's just something to keep an eye on. So actually, if you were trading up here, remember we got in at this move here, which again, apex of the move, which is freaking awesome. But if you got into this move here, your discretionary target could have been the top of this range, which actually would have been a really good target to do. You would have got your 15, your 20, and then your discretionary potentially. So awesome. All right, we're going back up the other way. So let's mark up a few targets here, and we're at about 8 a.m. So we'll go to 8:30 is when I typically stop. Can we mark this? Let's mark it. I don't think we'll use it, but we'll mark it. We'll mark that one, and we'll mark this one. It seems to be a major one. All right, so let's see what we get. So we don't have a 2-try yet, so even if it closes above here, we wouldn't trade it. So no 2-try. So we've got a solid 1, not pulled back far enough, so it's still in 1. We're still in the 1 count. See, if you would have taken that, you're stopped out now, so that's important to get those 2 tries. Still no 2-try. Okay, there's your official 1. I hope that makes sense. Pull away from the moving average and back. So now I can write my 1 in. Let's crosshair off here. So we'd be looking for a close above 40 to potentially take a short. Okay, so your 1 cycle is complete, and now we're looking to start over. So now we're starting to go back down. So this could potentially be a 1 if we get a pullback, and then we'll start using some lower levels here. So no trade up there. I'm going to use the further away of the 2. I'm not going to mark this one up. I'm going to look at the 75 level, and again, that becomes green. There's a lot of sitting on hand, so it's helpful to keep everything clean so you don't accidentally trade a level you didn't want to. So this level's been used. We'll take that off. This level here has been used just barely, so we'll take that off. All right, continuing to work here. So now we can put in our 1. We're almost at 8:30, so put in our 1 there. All right, so we're looking for a close below 75. Okay, here we go. So this is a 1, strong pull away from the moving average, back to the moving average. Now I can place my 1, and now I'm ready to place my 2. At least where I want my 2 to be. My 2 is where I want it to be. So now we have a close below the moving average. The problem now I see with this trade is that stochastics are at 11. They're not below 10. I guess as a purist and wanting to stick with the rules instead of varying them on every trade, I would not take this yet unless I can get another close in this candle. Yeah, I would have to stay away, I think. I think I'd have to stay away. It works. But I think I want to stick with the rules. It could be a shot if you're willing to take it. You would buy this candle here because this is your first close below, so you'd buy this candle here at maybe 71. You'd be looking for 86, which you've already gotten, and then you'd be looking for 91 for plus 20. So clearly, I missed the boat there. I don't know. I think hindsight trading can be pretty dangerous, like I've said before. And so maybe you go every single time and take that, and then 7 times out of 10 it actually continues lower, and then the 3 times you get the pop up. Who knows? We'll see how it works out, but I probably would have stayed away from that one. And back down it goes. So that's going to be my review. Let's see our opportunities here today. So opportunity was right here. We had a signal candle and an entry to get our plus 15, plus 20, and then discretionary. And then this was a point here that we looked at, so we'll mark that up. This was our entry candle. This was our signal candle is what I'm doing. Signal candle, and then this becomes our entry candle. Our stop becomes 57, and then our target below. So that's a 1, 2 success. And then the 2 questionable trades were this one here, where you didn't get the close below. I guess it's still valid. It's inside the same move, so you could buy this candle here. So we'll mark that up. Signal candle, entry candle, plus 15, and then you had the opportunity down here that we can mark up as well. So actually 4 opportunities, signal candle, 4 opportunities. I probably would have taken 2 of them if I was on my toes, ready to go on those, and called it a day. You could have potentially gotten 4. If you got all 4, you'd be in 300 a trade, so $1,200 on the day on 1 contract. Oh no, that's 2 contracts a trade. It would be half of that, so 600 with just 1 contract on the day. Cool. So another week, another set of opportunities. Hope you have a chance to load up your charts, and I'll be kind of sitting focusing on what's going on. Actually, each day this week. So we'll see what happens, and then I'll go back and look at all of November come the end of the week, and just see where we're at. Maybe December, start a fresh set of trades, and go from there. I did get Amy's on board with kind of helping me as what I'll call my CFO. She's going to look at the the financials every week. And so because of that, I think it'll provide kind of psychological help to me that I know that she's going to be looking each week to make sure that I'm managing the account properly. So I don't know. It seems kind of weird, but I wanted to do it because it'll keep me accountable and just making sure I'm using the checklist, using the right things. So we'll sit down and we kind of look at the finances each month, see how you did, see how I did, and just make sense of everything. But hope this helps. And of course, I'll send trades and reviews as they come this week. Let me know if you have any questions. Talk to you later.